Welcome everyone to Vested Interest. This is Shane back again for the stock pick of the day video. It is October 10th. Today we're going to take a look at Cisco Systems out of the information technology sector. Let's jump right in the video. If you want to know more about this company, check them out at www.cisco.com. That is www.cisco.com. Cisco helps seize the opportunities of tomorrow by proving that amazing things can happen when you connect the unconnected. An integral part of our DNA is creating long-lasting customer partnerships, working together to identify our customers' needs and provide solutions that fuel their success. We have preserved this keen focus on solving business challenges since our founding in 1984. Len Bozak and wife Sandy Lerner, both working for Stanford University, wanted to email each other from their respective offices, but technological shortcomings did not allow such communication. A technology had to be invented to deal with disparate local area protocols, and as a result of solving their challenge, the multi-protocol router was born. So they have been in business, or at least solving problems, since 1984. Again, they are information technology. They have their hands in networking through their switches and routers and wireless connections, wireless mobility through access points and controllers, security through their firewalls and secure logins, analytics, data centers. They are a software and hardware provider for personal and business use. Again, Cisco Systems, ticker CSCO, and check them out at www.cisco.com if you want to know more about the company. Now, there was a lot of green for a change, so it was nice to see. This was one of the few companies that had pulled back on the day, at least in my portfolio. I thought we'd look at one in my portfolio, so full disclosure, I am long on this one. They were down ever so slightly, though, 0.09%. We are talking about Cisco Systems, Inc., ticker CSCO, out of the information technology sector. Closed out the day at $53.87. 52-week range as low as $38.60, as high as $58.19. So they are definitely closer to their 52-week high than their 52-week low. Average volume 18.2 billion. Today's was 13, and a lot of volatility today. You can clearly see that volatility throughout the day. Market cap of 218.435 billion, a beta of 0.96. So they are just slightly less volatile than the overall market, but again, a lot of volatility today. Price to earnings ratio of $17.55 per share. That's a pretty decent price to earnings for a company like this. They have been around for a long time, but anything in the information technology space in the teens usually is in a pretty good spot. EPS, earnings per share, is sitting at $3.07 per share. Earnings date sometime between November 14th and November 20th is their next one. Forward dividend is $1.56 per year. They are quarterly payer. We'll see that quarterly payout here in a little bit. And a nice dividend yield on this one, 2.89%. Obviously, if they were to pull back closer to this 52-week low, you could get a higher dividend yield. My dividend yield on this one is a little higher than that as well. My cost basis is lower than where it currently sits. We'll see that here in a little bit as well. Ex-dividend date was October 3rd. Looks like they're going to pay out on October 25th. So you would not be in line for that October 25th payout if you were to buy them now. You'd have to wait for the following. And a one-year target, at least according to Yahoo Finance, of $58.73 per share. Now let's jump into their statistics. We're going to look at dividend yield theory to see that if this one is presenting any value. To do that, we go into statistics. We go down to dividends and splits. We look at their 5-year dividend yield average of 2.97. We compare it to a current 2.89. And since this is lower, this means it is potentially overvalued. And I would tend to agree. I want more of a pullback on this one. So dividend yield theory holds true on this one. I would say this one is potentially overvalued from where it currently sits. Nice payout ratio on this one, 50.16%, so a lot of room to increase that dividend payout over time. Now we're going to jump into the financials. A lot of good information here. You can find their balance sheet, their income statement. We're going to look at free cash flow. You want growing dividends, and to have growing dividends, we need growing free cash flow. So 2020, we went back to 14.6 billion, 2021 up to 14.7 billion. A drop in 2022 to 12.7 billion, a big jump up into 2023 where we're at now to 19 billion. That's where we're at as of date. And as you can see here, repurchase of capital stock, they are repurchasing shares pretty consistently. And in 2022, even though it was a drop from 21 to 2022, you can see that a lot of that can be accounted for. All of that actually can be accounted for in the repurchase of their shares. And they are still repurchasing shares today, even with the big jump up in free cash flow. So overall, from 2020 to date, growing free cash flow, nice to see, and growing significantly. Now, stock analysis is another site that I like to go to. You pick any sources that you like, but make sure you're picking more than one. Go ahead and 2, 3 sources so you can back check the information you are getting is accurate. And stockanalysis.com has 20 stock analysts that have taken a look at this. They call it a consensus buy. Again, I am on the hold right now. I am not buying anymore. I've not been adding to this position, so I disagree with them here. I would look for more of a pullback on this one. Maybe not all the way down to my 50 or to my cost basis, but at least more of a pullback from where it currently sits, closer to that 52-week low. Now, they have a low estimate of $45, which would be a 16.47% decrease from where it currently sits. They have an average estimate of $61.48, and that would be a 14.13% increase from where it currently sits. And if it happened to hit their high of $100, that would be a 85.63% increase from where it currently sits. All the while, you could collect that 2+% dividend yield, nearly 3% actually, where it currently is 2.8, right around there where it currently sits. Now, I like to go into statistics and look at return on equity and return on invested capital. I like 10% or better, and this is smoking both of those. Return on equity, 30%. Much higher than the 10% I'm looking for. Return on invested capital, 55%. Again, much higher than 5 times what I'm looking for there. And I also like to look at earnings per share growth. I want 5% or better. This says over the next 5 years, 20.35%. Very high expected earnings per share growth. Now, that's just a projection. That doesn't necessarily mean it's going to happen, but that is what their expectation is. So that is very nice. And their revenue growth is looking or expected to grow at 3.49%. Again, just a forecast, but nice to see. You want growing revenue. You want growing earnings per share. All good numbers on this one, except for this valuation here, in my opinion. Let's keep going and look at the dividend. We want growing dividends over time, right? So as I said on this one, I am long Cisco. I do have 167.086 shares. My cost basis is $49.77 per share. I am up 8.24%. So I would like it under my cost basis. I would love it to pull back down. I think we saw on the previous slide around $45. So if it pulled back into the $45 range, I would build this out to probably 200 to 250 shares, or at least until it went back up above my cost basis. But this is one I would love to add to. I just have not been doing it because it is a little rich for my taste at 53.86. So again, I want more of a pullback on this one. I am up slightly on this one. I have $8,315.78 into this. It's currently worth $8,999.25 or 25 cents. But again, payout ratio is low on this one, 50.81%. Dividend growth is not the strongest. It's only at 2.65%. I'm hoping that this increases, but I can forego a little bit of dividend growth if they are consistently buying back shares like they are. I do like that. I would like them to increase this a little bit, maybe with the big free cash flow they have that we saw, the $19 billion that they had this year. Maybe they start increasing this a little bit more. That would be nice. We went back to 2020. October 1 was 36 cents. April 2021, they jumped it up to 37 cents. April 2022 to 38 cents. And April 2023 to 39 cents. So I'm expecting another jump up in April of 2024. I'm hoping that it is not just the typical penny that they get it, but again, I will take the growth. This one also looks like it might be experiencing some price appreciation. So overall return on this one looks nice with a low payout ratio. They have a lot of room. The dividend is safe. I really like this company. Just don't like the current valuation, and I want more of a pullback on this one. This is the vested interest stock screener. This is how I set up the videos. That's why we start with understanding the business. We look at the business. I give you the internet location where you can find the business. You can look it up yourself. You want to understand the business as well. If you're interested in a company, make sure you know what they do, how they're making their money. You want growing free cash flow over the last 5 years. We looked at that, and it is. You want a growing dividend. It's growing, even though it's a slow grower on this one. Dividend payout ratio of 75% or less. This one was at 50%, so it meets that criteria there. Check valuation based on dividend yield theory. Now, this is the one that we saw that showed dividend yield theory says it's a little overpriced right now, pretty close to fair value, but a little higher than what we wanted or what I wanted. I want a bit of a margin of safety on it. Buy below current cost basis or worth 15% of its 52-week low. It is not lower than my current cost basis. That is why I'm not adding to it. And return on invested capital and return on equity 10% or better, and it smokes both of those numbers. Earnings per share growth equal to or greater than the industry or 5% plus. We saw that it was expected to be around 20%, so that's very nice. Again, it actually meets the criteria of 5 of 8 to be investable, but I would do, again, more of a deep dive. You want to get into the financials. You want to look at the debt to equity ratios. You want to look at the revenue. Is it growing? How is it growing? Are they paying down debt? get into their income statement, their financial statements a little more, and learn more about this company if you are interested in buying it. Don't just buy it because I am holding it. That is a good way to get yourself into trouble, and you will not understand what you are owning. So it must meet 5 of 8. If it's a financial company, I throw in price to book. I want a 1 is fair value. Anything under 1, you're really looking for under 1 is undervalued whenever you're looking at banks, for example. So this is my stock screener. You can use this, tweak it to how you want it. Make sure it fits your investing criteria. Don't just blatantly or blindly copy mine. Make sure you are making your own criteria. You can use this as kind of a guide to set up yours if you'd like. And that is really it on this one. Let me know what you think of Cisco Systems down in the comment section below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us here on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors. We look at companies like this in the Stock Pick of the Day series Monday through Thursday. Every Sunday I do a portfolio update. So if you are a dividend growth investor, you're into this kind of content, hit the subscribe button down below. It really does help out a small YouTube channel like me. Share with anyone you think might find value, and drop a comment. Let me know, are you a Cisco investor? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company that you would like me to do a Stock Pick of the Day series video on, go ahead and drop that in the comment section down below, and I'll work it into the rotation. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money. You should never invest any amount of comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.